Hi guys, Platinum Fund is here again and we continue our series of videos for crypto venture capital funds. As you know, venture capital funds are always related to high risk. Since venture capital funds finance innovative startups, there is no guarantee that the project will be successful and make a profit. Watch this video till the very end to find out how to deal with typical problems every crypto venture fund faces. Lack of adoption. Ignorance of your audience and inability to attract it reduce the fund's reputation. Agree that in our time the success of a product depends not only on its quality but also on marketing strategy for its promotion. VCs should care about their marketing campaign as much as they care about the startups they invest in. A good solution for venture capital funds may be to attract marketing partners. Special agencies will promote both the venture fund itself and their clients. This solves the problem of expanding the audience and increases the value of the fund for potential startups. Marketing partners help venture capital funds and their clients with the following things. Research the target audience. Your fund will be working with crypto startups, so it's worth thinking about what kind of developers you want to attract and what their main audience is. Startups will be interested in your services if you show that you understand the needs of their audience. CEO based on client needs. This is one of the key marketing strategies. If your fund is more visible in search terms than the others, it will be easier for you to cope with the competition and attract an audience. Web development. If your site is clear and informative, you are more trusted. Contact marketing specialists, they will help you to achieve the best result. Competition. The cryptocurrency market is highly competitive. Among the venture capital funds that invest in cryptocurrencies, Coinbase Ventures, Animoca Brands, Shima Capital, GSR and Andreessen Horowitz A16Z are in the lead. Over the past year, according to Cryptorun.io, these funds have made 435 deals. It may seem that the market is already crowded, but competition in the innovation market creates unlimited conditions for development. Thanks to this, you can decide how to improve the quality of your services and get ahead of your competitors. You can see other performances by visiting special private and open events and network sessions. Start growing your network by visiting professional events and getting useful contacts and finding new gems. Use onchainlab.ai to find all the events of your interest, and if you prefer using a mobile phone, the Telegram bot Events Today bot will do the same. If you want to get in touch with VC funds and startup founders directly, contact us and get a full database. Check the video description for instructions. Also, do not forget about trend monitoring. Perhaps your competitors are investing in cryptocurrencies but do not know that AI tokens may become a trend in 2023. If you invest in startups with such a concept, you can take advantage of it. Regulatory challenges. Cryptocurrency is a relatively new asset for the financial market. Therefore, it is not regulated at the legislative level in the same way as fiat or securities. Crypto investments are subject to higher risk. This means that even seemingly successful startups chosen for investment can fail due to market sentiment. However, there is special news for venture capitalists. The US Securities and Exchange Commission in February 2023 proposed amendments to the rules related to private equity firms, hedge funds and pension funds. There were no detailed comments, but it was suggested that crypto firms might lose the status of qualified custodians to store the assets of their clients. This means that the assets will have to be transferred to other storage. Apparently, in the future, crypto funds can expect verification from the SEC. If you want to follow other changes in the investment market, you can use OnChain Lab to find financial conferences to be updated firsthand. Cybersecurity. Venture crypto funds should take care of cybersecurity. The surface of cyber attacks has become larger due to mobile devices and remote work of employees from home. Typically, venture capital funds provide security in the following way. Conduct portfolio audits. Identify vulnerabilities in the company's digital environment and suggest what threats may arise. Potential firms and their employees should be familiar with basic security rules and be warned about phishing and malware. It is also worth installing two-factor authentication and performing a test hacking of the system to find vulnerabilities. Check the fund's security measures. For example, in the US, venture funds can conduct a security assessment according to the NIST cybersecurity framework. As you can see, the key features of this framework are identifying the risks, protecting from cyber attacks by different strategies and technologies, also detecting anomalies in the system, responding and analyzing, recovery planning. It is also important to plan for failures. It is better to have a plan of action in case of a hack and respond to the threat in time than not to foresee a cyber attack. You can suffer multi-million-dollar losses trying to recover your data, but if you take care of the guidelines and remember to report the cybersecurity breach to the SEC, you will save the fund from the collapse. Implement Managed Detection and Response. Managed Detection and Response (MDR) services can also provide you with a high level of cybersecurity. Threats will be monitored constantly, so security measures are activated instantly. It is not always possible for companies to provide a staff responsible for cybersecurity, but turning to MDR can be a good alternative. As we have already said, it is easier to prevent a blow than to recover from it. Poor portfolio visibility and management. Portfolio management means shaping investment tactics. In this process, it is important to analyze the market, make reasonable decisions, and allocate resources based on them. Portfolio management may include market research. Cryptocurrency is a rapidly growing industry, so it is important to constantly monitor market trends to direct investments into a potentially successful project. Analytics allows you to choose further investment strategies, including timely exit decisions. Risk profiling. It is essential to calculate how long it will take the fund to recover its initial investment. Balancing fast payback with high potential is critical when managing new investments in a venture portfolio. Exit strategies. You should always have an exit plan. It usually includes determining the best and worst case scenarios as well as exit goals. The smarter the exit strategy, the lower the risks of your investment. The key indicators of a venture portfolio are financials and cash position. This is important for understanding the real state of affairs of the fund. Pay attention to cash balance, burn rate, runway, and gross profit. Do not also forget about the forecast for these indicators, so you can determine the readiness for new stages of investment. True North KPIs. These KPIs will help the venture capitalists determine how the company is performing against sector benchmarks. These include key performance indicators, active users, a customer net promoter score, active customers, and average contract value, ownership and cap table data. Before deciding on a new investment, the fund determines the proportion of its ownership in a potential company. This indicator must be clear. In addition, the venture fund must receive information about the securities of the company in which the funds invest. All this helps to structure the deal. Lack of customer trust. Perhaps this is the most obvious and non-obvious problem in the same time. Everyone knows that you need to be customer-oriented to remain in demand in the market, but how exactly to win the trust of the client? Some venture capitalists, in an interview with the Protocol platform, gave their advice on optimizing work with the clients. Yusuf Khan, partner at Rich Ventures, reminded us that buyers and investors often ask different questions about the product. For example, a buyer may be thinking about how this or that investment will affect their productivity and help their company. Venture investors research the usefulness of the product in the market, its competition, etc. Unexpected advice from Preeti Yusuf Choksi, partner at Norwest Venture Partners, to live through all the difficulties with the company. This also implies to the emotional support of those in whose product you invest. It may seem like strange advice, but this is how you earn trust and respect when you are responsible for helping a project and offering any solutions that can help. Finally, do not forget that the crypto industry is attractive for startups and investors. Your foundation should focus on retaining talented developers in its portfolio. This can be an unusual and highly successful experience in an emerging industry. As you can see, crypto venture funds can face a lot of problems during their work. However, each of them has a solution. We hope that venture capital funds that invest in crypto startups will be able to take advantage of our tips for solving common problems. In the next video, you will discover how to choose the right startup to invest in. Stay tuned. Bye!